Kaca Digital Berhad is a Malaysian digital business group listed on the ACE market of Bursa Malaysia. The company was formerly known as Kaca Media Berhad and is associated with entrepreneur Patrick Grove. Its main businesses include digital media, online advertising, and IT solution. The company has grown rapidly through acquisition and strategic investment. In 2025, Kaca Digital Berhad recorded revenue of RM67.62 million, showing strong business growth. Based on its expansion activities and increasing financial performance, the company is currently in the growth stage of business life cycle.
Good morning, Madam Lecturer. My name is Lim Woo Kyung, and I'll be proceeding on to our company's financial performance. So looking at our financial performance from the final year of 2023 up to the final year of 2025, Kaca Digital demonstrates a strong growth. For revenue, it reached up to RM67.6 million, representing a 76% year-on-year increase. Meanwhile, for profit after tax, it grew up to 8.3 million, which is a 58% increase, while the EBITDA expanded to RM30.7 million, which is 69.5% growth. The company maintains a net cash position of RM19.8 million, with 32 million in cash against 12.3 million in debt. This conservative leverage profile indicates financial stability and also provides flexibility for future growth initiatives. Next, I'll be presenting about the three-pillar business model. The company operates through three distinct business pillars. The digital media segment anchors iMedia Asia, which operates 14 digital publishers across multiple languages and provides access to over 8,000 influencers for integrated advertising solutions. The business-to-business expo pillars, acquired through one international exhibition, taps into the regional exhibitions market with recurring annual revenue cycles. The IT solution segment represents by Nexible offers software as a service based subscription services with attractive gross margin of 70 to 80%. A key strength is their acquisition strategy. Since listing, the company has completed 17 acquisitions while demonstrating improving capital efficiency. Acquisition multiples have declined from 12% EBITDA in the year 2021 to approximately 5 times EBITDA in the final year of 2025. This indicates the disciplined capital deployment. I'll continue on to the investment recommendation. Our recommendation is to proceed with the investment. The company demonstrates the strong financial fundamentals with 76% revenue growth and 58% profit margin growth. And also the management have proven execution capabilities through 17 successful acquisition with declining multiples, showing improvement capital efficiency. The balance sheet is conservatively leveraged with manageable debt levels, providing financial flexibility for future growth. The three-pillar business model reduces concentration risk and create multiple growth factors. Additionally, management has strong industry experience and maintains significant equity stake, aligning their interests with external investors. We proposed an investment of 8 million for 5% equity stake, targeting the returns of 3 to 4 times MOIC with a 25% plus IRR over the investment horizon. That is all from me.
Okay, for part 3, harvesting strategy. Kaca Digital Berhad implemented its harvesting strategy through a public listing on the ACE market of Bursa Malaysia on 28 July 2023. Unlike a traditional IPO, the company entered the market through a regularization plan and a right issue exercise. Through this process, Kaca Digital successfully raised approximately RM41.04 million. The funds were mainly used to acquire iMedia Asia Sdn Bhd, support working capital requirement, and finance future business expansion. The listing strengthened the company financial position and provide access to public capital markets, supporting its long-term growth strategy. The success of the harvesting strategy can be seen from the strong investor response to the company's right issue in 2025. Kaca Digital offered 19.12 million shares, while total application reached 160.64 million shares. This resulted in excess application of 70.52 million shares and and oversubscription rate of 78.25%. In addition, the company successfully raised RM24.3 million from this exercise. The high oversubscription rate indicates strong investor confidence in the company's future growth, prospect and business expansion plans. Following its public listing, Kaca Digital show positive market performance. The share price increased from RM0.16 at listing to RM0.51 by the end of 2024, demonstrating strong investor confidence. The company market capitalization also grew significantly from RM71.06 million to 228.23 ringgit million, representing a growth of 18.75%. Furthermore, investors who purchased shares at the listing price and held them until the share price reached RM0.26 will have earned a return at 62.5%. In conclusion, Kaca Digital harvesting strategy was successful because it raised capital, attached strong investor demand, increased company value, and generated positive return for shareholders.
Next, we analyze Kaca Digital Berhad financial health based on profitability, liquidity, and solvency from 2023 to 2024. For profitability, the net profit margin increased from 8.74% in 2023 to 13.72% in 2024 before slightly decreasing to 12.31% in 2025. Despite the slight decline, profit after tax continued to increase, indicating strong business performance. For liquidity, the current ratio improved from 1.67 times in 2023 to 1.99 times in 2024, although it decreased to 1.11 times in 2025 due to expansion activity. The ratio remained above 1.0, showing that the company could still meet its short-term obligation. For solvency, the debt-to-equity ratio increased from 0.35 times in 2023 to 1.14 times in 2025. This was mainly due to acquisition and business expansion. Overall, Kaca Digital remained financially healthy with strong revenue and profit growth. Kaca Digital Berhad is financially stable with profit, good liquidity, and strong revenue growth. Key risks include dependence on digital ads, competition, cybersecurity issue, and acquisition risk. The company should diversify income, improve cybersecurity, manage debt carefully, and ensure effective acquisition. Overall, despite higher leverage in 2035, the company remains stable and has strong growth prospects.
For part 5, we provide our overall evaluation and recommendation for Kaca Digital Berhad. Based on our analysis, our investment recommendation is hold. This recommendation is supported by the company's strong financial performance. Revenue increased from RM23.57 million in 2023 to RM67.62 million in 2025, while profit after tax increased from RM2.06 million to RM8.32 million. This shows that the company has achieved consistent growth and improved profitability. In addition, Kaca Digital has successfully expanded through acquisition, which have strengthened its market position and increased its revenue-generating capabilities. Looking at the future outlook, we believe the company has strong growth potential due to the continued expansion of the Southeast Asian digital economy, increasing demand for the digital advertisement, technology solution, and digital transformation service creates significant opportunity for the future growth. However, there are also risks that need to be considered. The company operates in a highly competitive industry and faces competition from both local and global players. Furthermore, its expansion activity has increased debt levels, which may create additional financial risks. Overall, Kaca Digital demonstrates strong growth potential and remain financially healthy. Therefore, our final recommendation is hold for long-term investment while monitoring future growth and debt management. Thank you.